In this video, we're going to be talking about Australia's affordability crisis and how you can potentially work against the system to create great outcomes for yourself and your family. For me, financial freedom is about creating choices. It's about having some income come in from property investments that allow Emily and I to make decisions to spend more time with our kids, to have some more holidays each year, and to work on projects and businesses and take on passion projects that we love and enjoy. So if you're interested in hearing me talk on more content around real estate, renovating, and financial freedom, make sure you subscribe to the channel down below. And if you could drop a like on this video, that'd be much appreciated. So how does Australia's dire property affordability compare to the rest of the world? The newly released data, which looks at assessing a housing affordability in 94 major markets across 8 nations: Australia, Canada, China, Ireland, New Zealand, Singapore, United Kingdom, and the United States. So some big first world nations. Now, the least affordable market was found to be Hong Kong, with a median multiple of 16.7, followed by Sydney at 13.3, then Vancouver, San Jose at 11.9, LA at 10.9, Honolulu at 10.5, and Melbourne at 9.8. So you can see Australia is a front runner when it comes to unaffordable property, in both Sydney and Melbourne leading the charge. And I think that's generally going to be in those blue chip housing markets where you're looking at houses between $2 to $10 million. Now, you can see from this little chart down here that they've ranked things as affordable, moderately unaffordable, seriously unaffordable, severely unaffordable, and impossibly unaffordable. And Sydney and Melbourne would essentially fall into impossibly unaffordable for the everyday income earner in those cities. Now, when we take a look at Australia in a little more detail, Sydney has had the first, second, and third least affordable housing of any major market in 15 of the last 16 years. So Sydney's been affordable over the last 2 decades. Melbourne's multiple is the 88th least affordable of the 94 markets. Now, it's interesting because when we take a look at Adelaide, they're also considered significantly unaffordable, with a multiple of 9.7 for Adelaide and 8.1 in Brisbane, 6.8 in Perth. So even looking at the minor capital cities now in Perth, Adelaide, and Brisbane, on this affordability ranking, they're still significantly unaffordable. Now, Perth's relative affordability is offset by separate data showing that its rental market is one of the worst in the developed world when it comes to finding a home to rent. Its rental vacancy rate of 0.4% is far worse than the second-rated international alternative, Berlin, at 0.8%. Now, that is some interesting data because a low vacancy rate means that there is pressure on rental prices and rental stock. Now, what we're seeing across Australia, not just Perth, but even in the Brisbane, Adelaide, Sydney, and Melbourne markets, is investors selling up. Now, if they're coming out of Victoria, they might be selling because of some changes that the government have made, but even across Australia, people are selling out because we have these higher interest rates. This is reducing the available rental stock and means we've got these significantly low vacancy rates. If you take a look at Brisbane's vacancy rate, it sits around the 1% mark, so it's also chronically undersupplied. And it's probably likely to be the case in most of your major capital cities that they're sitting around that 1 to 1.5% or less in terms of the vacancy rates, which means we are in a chronic undersupply across Australia. Now, the ironic thing around housing affordability in Australia is that we have so much land. Australia is enormous. You can probably fit most of Europe in Australia's geographical space, and we just have so much land supply in this country. The big issue is red tape. We have a lot of red tape when it comes to building property. To create new land, to work with builders, and to bring a new property to market is very expensive and actually very difficult to get through that process. We're also very centralized along the coastlines and across our major capital cities. Although we only live on less than 1% of the land supply, people want to be near other people and people want to be near the schools, the cafes, the shops, the jobs, the high incomes that they can earn, the transport, the football games. There's so much community built around these cities, as well as lifestyle, that people don't want to move out into the sticks per se, into central Australia, even though there's a lot of cheaper land available out there. Now, I don't really see the pipeline of housing affordability being fixed anytime soon. Even if they cut interest rates, it doesn't really make a big difference in terms of the affordability of property because we've got this limited supply story. We have an overwhelming amount of demand for property, especially in those scarce areas and landlocked locations. And that's where we focus as a buyer's agency here in Southeast Queensland. When we're looking at property for clients taking an investment mindset, we're looking for property in landlocked locations because the location does a lot of the heavy lifting. We also want to make sure there are no flood overlays, that there's no main roads or thoroughfares cutting through the property, or potential infrastructure issues down the track. We then want to be closer to the good school zones, closer to the parks, closer to transport networks that can allow you to get to the CBD or to the coast quickly. We also want to look at what the government is spending a lot of money on, and there is a lot of infrastructure spending here in Southeast Queensland, which has been brought forward from about 2040 to 2050 into the 2020s because we have the Olympic Games coming up in 2032. Now, I'm not naive in thinking that Brisbane is the only market. I'm just a specialist and I run a Brisbane buyers agency helping people buy their own home or an investment property in my business at Purpose Property here in Southeast Queensland. But if you're just starting out and you don't have the funds to break into a Brisbane or to break into a Perth, you can look regionally. Look at those major regional markets. Emily and I own a property in Coffs Harbour, for example, which is 2 kilometres from the water at Jetty Beach and 2 kilometres from the centre of town. It's in a really good location for a long-term investment, and that's why we're keen to buy in that Coffs Harbour market. We also knew that that area had a diversified economy and around about 100,000 people in terms of its location. So if you're looking at regional markets, that's what I would generally look for in the fundamentals. A good quality landlocked location, 100,000 people plus ideally, and a diversified economy. The regional markets are a little bit cheaper than the major capital cities at this point in time, but they've also seen some major growth over the last few years out of that COVID boom. The thing I find most interesting is that people are expecting a crash. There's always a talk that there will be a global financial crash at some point in the near future, and those crashes do happen. But if you take a look at history, especially Australian history over the last 30 to 40 years, you'll see that the crashes in property prices dipped around 10 to 15% at their worst. Now, if you did buy in a mining town or an area that had 5,000 people and those areas crashed, you could have wiped hundreds of thousands of dollars. And I know people personally have bought multiple properties in mining towns and wiped close to millions of dollars on their balance sheet. But if you're making fundamental decisions where the fundamentals stack up and you're looking at the land and the location, you're looking at that long-term growth potential, you're looking for ways to add value and balance your cash flow, you are making an educated and informed decision and you're de-risking your investments. Once you're able to get your foot in the door, that's where you can get a snowball when it comes to property investing. The first property is always going to be the most difficult. It's so difficult to save. As you can see when we're comparing prices of houses, as you can see from today's article around housing unaffordability in Australia, it's benchmarked against the average income. Once you're able to save and get into the market, you can then see capital growth take place over time. You can also add value to the property by giving it a paint job. Maybe paint the inside, paint the outside, have the flooring updated, have a new kitchen installed. There are ways to increase and manufacture value on the property as well. And that's where you can go back to the bank, refinance, and continue growing your asset base. I think our standards of living are getting higher and higher because it is almost the expectation that every household is going to have double incomes. In my opinion, is that necessarily the best thing for society? It seems to be where we're going in terms of what we need from a lifestyle point of view, but I really enjoyed having one parent at home growing up and my parents were on a single income. So it'll be interesting to see over the next decade if households move away from double incomes back to a single income and maybe lower their expectations in terms of the property. If you look at a lot of the properties that were built in the 1950s, 60s, 70s, they were all 3-bed, 1 bath, 1 car. And the parents had a room and the kids maybe had 1 room or shared those other 2 rooms. And there was just 1 living space and 1 basic little kitchen and 1 bathroom. Maybe households will move back towards that. It doesn't seem to be the way. We seem to have bigger homes and bigger expectations, and that's why double incomes are supporting the increased lifestyle of Australians. So I'd love to hear your thoughts in the comments below. Where do you see housing affordability going forward across